Good morning, everyone. We'll get started. We got a lot to cover here today. My name is Brian Sweeney. I'm a partner here at Redpath, and I lead our manufacturing group as well as our ESOP practice group. Joining me today for the presentation for the webinar is Paul Longsdorf, and I will let Paul introduce himself.
Hello, everyone. Paul Longsdorf. I'm a partner here at Redpath in our construction, real estate, and engineering group, and practice in tax and dabble in accounting as well.
All right, thanks, Paul. So we will be taking questions. Please utilize the chat box feature. We've also have another one of our partners, Steve Wallin. He's going to be monitoring questions throughout and throwing them to Paul and I as we get through the presentation more towards the end. So please use the chat box feature and make sure that you're muted. So the focus today of our webinar is the Paycheck Protection Program Flexibility Act, or the PPPFA, as we accountants love acronyms. So that's, as you'll see that throughout, as there's a reference to PPPFA, that's what that is referencing. As well as the guidance that some of you may have seen yesterday, the SBA did issue an IFR, an interim final rule, an updated interim final rule, as well as the new forgiveness application, actually two new forgiveness applications. So we have incorporated those that guidance that came out yesterday morning into the slide. So Paul and I and others at our office spent the bulk of yesterday getting up to speed on it, see what changed, and have that incorporated into here. So just a brief overview. Paul will go through a PPP overview briefly. Then the rest of the bullets, the loan maturity, the deferral period, all those types of things that are on there are really from PPPFA, the Flexibility Act that the President signed into law on June the 5th. And we'll run through what changes were made to the program and how it may impact you in your loan. Just a quick point here from the stuff that was the information that was released yesterday, the new forgiveness application. Really good news from a forgiveness perspective. A lot of the lingering questions did get answered, and for the most part, I think would be a positive change or a positive for people that are looking for forgiveness. So with that, we'll get going, and Paul will do the PPP overview.
Hey, Brian, I'm still on the, yeah, there we go.
Yep. Oh, sorry.
Yep. Perfect. Okay. Thank you. All right. So, so first, a little background. As we all remember, on March 27th, about 2.5 months ago, and it seems like about a year ago, the CARES Act was initially signed into law and authorized $349 billion in PPP loans. There was a mad dash for those, and on April 27th, Congress authorized another $310 billion in loans. Guidance has continued to come out, as Brian alluded. Obviously, we've had a flurry here in the last few days, which is really what we're going to focus on here today. The rules on the loan application itself are really set, obviously, because most of the funds have already been lent. The rules around forgiveness do continue to change, as we've seen quite a few changes in the last week or so. On June 5th, the PPP Flexibility Act, which again is our focus today, was signed into law. And then late on June 16th, so for most of us on June 17th, the new forgiveness application was issued, and as well as instructions there, and new interim final rule. So you still have until June 30th to apply for a PPP loan if you haven't done so to this point. As of yesterday, there was still $129 billion available, which I think comes as a little bit of a surprise, but you know, Minnesota did 600 new loans last week, but the loans that have been happening recently have all been smaller dollar amounts, and the larger dollar amounts went out early on. So I think the loan volumes are high, but the dollar amounts are not. As we go through everything here and as you go through your process of applying for forgiveness, important item to keep in mind is ultimately your lender is responsible for certifying your forgiveness application. They approve it and then they send it to the SBA for final approval. So, anywhere where there's ambiguities and you're not sure whether something's includable or not includable, and there certainly are still areas where that is the case, I would definitely get clarification from my lender to make sure that what you're doing is what they're going to approve.
Just important to note quickly, the application that came out yesterday was from the SBA. Your lenders might be slightly different, but the information on it should be the same. So it might be slightly different, but it should get to the same spot.
Right.
Okay.
So now for some of the changes. So the loan period, again, assuming that the portion of your loan that does not get forgiven, the loan period in the initial CARES Act was 2 years. The PPP Flexibility Act changed that to a minimum of 5 years. Now it's important to note that for all of you who had your loans on June 4th or prior, your loan documents all clearly say 2 years, and those have not changed by virtue of this act. The lender does have the ability to extend it to 5 years, and basically it's a mutual agreement. But if you think you're going to, want that extended, I would start talking to my lender, early on. I think as we go through this, I think we're going to find that with the flexibility that's come out in this act, I think there's going to be a lot less dollars that continue on in loans and a lot more that's going to be forgiven. But if you're in a situation where you think you're going to have any kind of substantial loan going forward and you'd prefer that to be over 5 years, I would start talking to my lender right away.
It appears as though the lender is not obligated to renegotiate. It appears as though it's up to them. I don't think the SBA had any language in there that they would be obligated to do anything differently.
Yep.
So talking to them certainly is important.
Yep, agree. So now the deferral period for the payments. So we all understand you took out a loan and we're hoping to get it forgiven. The requirement to make payments on the loan, originally has changed. So now you have until the SBA notifies your lender, or actually issues a forgiveness payment to your lender, or notifies your lender that for whatever reason you're not eligible for forgiveness. So now you have to or submit your forgiveness application within 10 months of the end of your forgiveness period. So if you're using the 8-week period, then 10 months from the end of your 8-week period. If you're using the 24-week period, then within 10 months of that 24-week period. So you can't defer that forever. Interest does accrue during the deferral period, but again, the interest that you ended up having to pay would only be on the portion of the loan that is not forgiven. Under the previous CARES Act, the deferral period was just 6 months. Now here's the where the really some of the really big changes start with the PPPFA. As I just alluded to, originally you had an 8-week period essentially to spend the dollars in your loan on payroll and other qualifying expenses in order to get your loan forgiven. That has been expanded to 24 weeks. Now that 24 weeks is optional if you had your loan prior to June 5th. So if for whatever reason, maybe under your 8-week period, you already met the requirements for full forgiveness. So you're looking at saying, hey, I'm just gonna stick with the 8-week period. you can elect that 8-week period. If your loan was June 5th or later, then you are under that 24-week period. So this covered period ends the earlier of 24 weeks from the loan funding or December 31st, 2020. And it would be pretty rare situation where that 24-week period would go out past 12/31/20.
Right. Since the last day we have is June 30th to apply for loans, it would appear that 12/31 wouldn't be a hindrance to anybody's covered period, at least in normal circumstances anyway.
Right. Now, the question has come up and have definitely heard other commentators talking about, well, is there any option to use anything in between the 8-week period or the 24-week period? And there appears to be a little ambiguity there, and we'll kind of expand on that a little later. But we need more guidance there, I guess, is the real short answer. But it may be possible that, if I, meet the requirements and I've incurred the costs to have full forgiveness, for example, after 16 weeks or 15 weeks, that I may be able to submit my application at that point. Again, can't say that for certain at this point in time. As Brian mentioned when we started here, a lot of this new information just came out in the last day and a half. So still continuing to go through that and look for more guidance.
We'll also talk a little bit about why that might matter. There's a few things of if you were able to choose a period between 8 and 24 on some of the required reductions, why that would make a difference to you or potentially make a difference to you. It does appear to me, and maybe I'm wrong, but the prevailing opinion is that it's 8 or 24, not in between. But again, as Paul said, well noted that hopefully some further guidance on that to make sure that that's what the intention was and that's what the rule says.
Okay, as we said, the application was issued, and we had a chance to go through that yesterday. And a couple of important things that came out of the application and the new instructions. The first is, I think everybody's aware there are some limitations or some reductions potentially in your qualifying expenses based on your full-time equivalents in your base periods as compared to in your covered period, and also if any individual's wages reduced more than 25% in the covered period as opposed to the base period. So there potentially are some reductions there. So one really nice thing that was clear was those reductions are applied to the covered expenses and not the loan amounts. So for example, if I go through the FTE calculations and come out and say, you know what, I have to reduce my expenses by 10%, as long as my expenses after that 10% reduction still exceed my loan amount, I'm still eligible then for 100% forgiveness on my loan. The second big thing there is that with the 24-week period, I think everybody's probably aware from the original guidance that annual compensation for anyone is limited to $100,000. Well, now that we've got a 24-week period, that means that the cap for that 24-week period of compensation that I can include is now $46,154 instead of $15,385, which is what it was over the 8-week period. So obviously significant increase there, and should help a lot in terms of, gathering the expenses to cover, what your loan amount was, which was based on your payroll for a 2.5-month period in 2019. We've got We've got links here for the forgiveness application as well as the instructions, and you don't need to write those down. We will send the PowerPoint information out to all the participants today. So we will get those out to you, but helpful information in those. As Brian alluded to before, your lender may have a slightly different application, or maybe the same, but they just want you to use their forms. But the instructions and everything should look generally the same.
Just by way of background for that 46,154, so that's arrived at by taking the $100,000 wage cap total, dividing by 52, multiplying by 24 weeks. So that's how that came. And the 15,385 Paul had alluded to is the same formula, just using 8 weeks versus 24. So that's how that number came about.
Yep, exactly. So they also issued a new EZ forgiveness application. And, I think quite honestly, largely because Congress were telling Treasury and SBA that everything was too complicated to apply for the forgiveness. And so they wanted them to issue an easier application. So there are 3 scenarios where you are eligible for that application. The first one there is, if you're a self-employed individual or sole proprietor who doesn't have any employees. So essentially what that means is your loan was all just based on your self-employment income from 2019. Makes a lot of sense there because your forgiveness is based on 2019 income there as well. So that's pretty straightforward, and you wouldn't expect to have any kind of FTE reductions or 25% reductions. So that all makes sense. The second 2 scenarios, or I should say the second and third scenario, both of them, for the most part, kind of require you to go through the same calculations and the same tests that you would do with the regular form to prove that you could use the EZ form. So, it may be simpler to complete that form, once you go through the tests, but I think if you're not in that self-employed individual category on top there, you're most likely starting with the full application either way. And this slide is really just that third method. I guess something to point out, and we'll talk more about this later, but the last bullet down there talks about, the borrower was unable to operate during the covered period at the same level of business activity before February 15th due to compliance with requirements established or guidance issued by the CDC or OSHA, or the Secretary of Health and Human Services. So, those are, presumably businesses that are going, that were required to shut down. Now, the hard thing here is, most of the businesses that we look at that are required to shut down, these organizations didn't shut them down. It was really in Minnesota, the governor, right, who said, hey, these businesses need to be closed. Now, the question is going to come up, well, didn't the governor do that under the guidance of the Health and Human Services or OSHA or Center for Disease Control? And do I meet that requirement? And again, less so for whether I can fill out the EZ form or not, and more for if I can just get around the FTE calculations altogether. That's going to become an important question, I think. And I think we need some more guidance on just exactly how deep that runs.
All right, so we'll go through that a little bit further in the FTE calc. This same on the bottom of there, that same language is in the FTE calc, and one of the exceptions or safe harbors.
Right.
Okay, so now we'll talk about the 8-week versus the 24-week period and some considerations that you may have in determining which period you choose. And just to note, it is a choice. The application that was released yesterday asks for you to fill out your covered period, so that 8-week period or the 24-week period. So it appears as though you'll be able to, you have 10 months since you have 10 months to apply for forgiveness at the end of your covered period. So you could run scenarios both ways if you chose, and pick whatever covered period may work the best for you. So there isn't anything that, at least based on what we saw yesterday, anything that is needed to be done, any action that needs to be taken by you today or in the next period. It's just when you fill out your forgiveness application. So first thing, pretty obvious, and Paul alluded to it a little bit earlier, if you did achieve full forgiveness during the 8-week period, then why not just go ahead and use that and get your stuff applied for. You're probably a little bit sick of PPP at this point and maybe want to just get it over with. If you've achieved full forgiveness, just get it done with. The next two are the two reductions in forgiveness, that those two calculations that were in the original PPP and stayed around and are in the PPPFA in a little bit different form and a little bit different safe harbors, but they're still there. So, you may be in a position where, that you held on to some employees during your 8-week covered period when we thought it was just going to be 8 weeks because of PPP. Business hasn't come back quite yet, and you're going to have to make some decisions on layoffs or furloughs coming up here after your 8 weeks. And how would the FTE reduction play into that? How would the 25% wage reduction play into that? So a lot of question and calculations on what that might look like. That goes back to Paul's point earlier on being able to choose between, is it 8 or 24, or is there some period in between 8 and 24 that you could utilize and maximize forgiveness and not get hit for full-time equivalent reductions if that's the case that you're in. So next one is kind of the same thing, and we have the math on there in the 46,154. Whatever one you do choose, the wage reduction in FTEs are based on that covered period, and the max wages to be used for forgiveness if you choose 24 is the 46,154. Next bullet potentially reduces the need to get creative on qualifying expenses. The most questions that I've gotten from clients and others are questions related to qualifying expenses. So what can I use? Can I prepay rent? Can I make a big profit sharing or ESOP contribution and utilize that for forgiveness? Can I do it any number of other things, but within my 8-week period, utilize that for forgiveness and during the 8-week period and just be done with it. The 24 weeks allows you, presumably or potentially, I guess, to just use normal payroll and get forgiveness. And I guess what I would say is, if that's the case and you don't have some reductions, why not just use payroll, make it easy on whoever's going to look at it or scrutinize it later, just use normal payroll for the 24-week period and be done and not have to worry about whether some of those expenses I had mentioned do qualify. Not suggesting that they don't necessarily, but I think they're a little bit less sure than payroll. So why not just make it easy on everybody and use the 24 weeks if that's available?
Right, and I think, Brian, that kind of falls under that category that I alluded to earlier. Talking about, hey, if you're not sure about something, talk to your lender on it. Some of those creative qualifying expenses are kind of the things that you might have been in a position to say, well, I should really ask my lender, but do I really want to ask my lender, or do I want to just get it in the application? So hopefully this takes away that issue.
Yeah. So good point there. And then the next one, the reduction is, Paul had mentioned this earlier, but want to reiterate, this was one of the things, at least that I was most kind of looking forward to on the new application, was whether or not the reduction would get applied to qualifying expenses or the loan amount. So, and it's clear in the new application, any reduction for FTE forgiveness, that reduction or the 25% wage reduction gets applied to the qualifying expenses. So you may be even in a position where you do fall into the FTE reduction or the 25% wage reduction, but ultimately it isn't going to impact how much is forgiven. So that was certainly good news. It is consistent with the first form, the original application form, but we were a little bit worried or concerned that it might get changed within the last or the new form that came out, but it did not. So it is based on qualifying expenses.
Right. So it really, with it based on those qualifying expenses, it really appears that unless there's a really significant reduction in FTEs and you can't get underneath the safe harbor of hey, I had to shut down because of the CDC or something like that, you're probably not going to have a reduction. Right.
Then the last point here, there's this term within the forgiveness form called employee owners, and forgiveness for employee owners are limited to $20,833. Just by way of background, again, the way that came about, that $20,833 is calculated by taking $100,000 divided by 12 months times 2.5. So that's what, for employee owners, that's the max forgiveness, wage forgiveness that can be utilized. The reason I put it in here, and the question we have is we don't have a definition of what employee owner means at this point. We don't know if anybody has a fractional share of a company, or if you have to be over some percentage of ownership, or if potentially ESOPs are qualifying or in there or something like that. We don't have guidance on that, and are certainly hoping for that to come out. I don't know if you have an opinion on where that might go, but we were hoping for some guidance on that.
Yeah, my guess would be that that they're probably, in terms of ownership, that's direct ownership. My guess would be the threshold is probably relatively low. I don't think the intent would be to try and capture individuals who owned shares through an ESOP. I'd be shocked if that were the answer.
Great, and it would appear it's there because so people couldn't play games with increasing wages to themselves for forgiveness purposes and things of that nature. So I'd agree, but hopefully there's some guidance that'll be forthcoming.
Yeah.
So next, I want to talk about the full-time equivalent and wage reduction test and changes that came through PPPFA. So the one thing, the original law, the original PPP program did have a reduction for these two things, for the full-time equivalent reduction and wage reduction. Thing that I want to point out here is that the safe harbor date on the original was June 30th. That was changed in the PPPFA to 12/31/20, so December 31, which, depending on circumstances, may be a positive or a negative. It isn't necessarily great that it's 12/31, but it was changed nonetheless. Kind of maybe a downside, you may need to wait until 12/31/20 to determine and apply for forgiveness if that safe harbor, if you're in the situation of that safe harbor. And there does appear to be some ambiguity, as Paul and I were talking just prior to coming on here. There appears to be some ambiguity within the language on in the application. And in one place, the application references that there's a date by 12/31 or the date you apply for forgiveness. The other place says that it says no later than 12/31. So it would appear that any day up to 12/31 you could apply the safe harbor. So hopefully an FAQ on this that will come out to guide us a little further on it.
Yeah, and Brian, honestly, the more I look at that, the more I wonder if it's not even an FAQ and just a revision to the application itself, just because it's really the instructions to the application indicate, that you've restored your FTEs anytime before 12/31/20, and then the table in the application has you plug in a number that's either your FTEs on the date of your application or 12/31/20. So it doesn't really seem to go together. So I kind of wonder if they don't just end up revising the instructions on the table.
Sure. Okay, so the next thing I want to talk about is the FTE exception, or two new exceptions that came in with PPPFA. So the first one here, I'll just read it quickly. If you have the inability to rehire individuals who are employed at February 15th and the inability to hire similarly qualified employees for unfilled positions on or before 12/31, then you don't have to do the calculations on the FTE exception. So if you can get comfortable that this would apply in your situation, then all the calculations on FTE don't matter. You're not gonna have a reduction related to FTE. Same thing on the next one. So Paul had this, talked about this earlier when he was talking about the forgiveness form, the EZ forgiveness form, and on some of the qualifications. So if you would fall under this, so if your business activity was, you could not get your business activity up to 215 levels by 12/31/20 because of COVID and because you were following requirements and guidance issued by Health and Human Services, the director of CDC or OSHA, then the FTE exception would not fall, well, you would not have to apply the other FTE rules as well. So the forgiveness application that came out yesterday does seem to lead you to at least number 2 before you go do a bunch of calculations. So our suggestion, I think at this point, would be to really look at number 2 there on business level and see if that would apply to you. See if you can get comfortable, maybe talk to your bank about that and see what their suggestion is, and see if you can get comfortable with that. Then you wouldn't have to go through the process of calculating FTEs and seeing if there's a reduction.
Right. Probably important, I think, to point out on number 1 there, you know, that you definitely have documentation requirements, you know, that you know, whether your lender asks for them or not, you need to make sure you're maintaining in your files, you know, that you made you know, offers to those employees and they chose not to come back, you know, and that you attempted to hire additional employees to replace them.
Okay, the next change that the Flexibility Act provided was, I'm sure you all recall the 75%, 25% test for forgiveness and for payroll costs had to be 75%. In the Flexibility Act, that was changed to 60%. So for forgiveness purposes, a minimum of 60% of forgiveness has to come from payroll costs. And then obviously 40%, a maximum of 40% would come from non-payroll costs. So the rent cost, mortgage interest, and qualifying utilities. Just one quick clarification, and then we'll go back up to the other one. Quick clarification. The PPPFA Act itself appeared to suggest that was a cliff, that unless you spent at least 60% of the PPP proceeds on payroll costs, then if you did not spend at least 60% on payroll, then there was zero forgiveness. That was clarified on June 8th, that that's not the case. It's very similar to the 75-25 test in that it's proportional to payroll costs. So there's not a requirement to spend 60%, rather 60% of your forgiveness, a minimum of 60% of your forgiveness is required to come from payroll costs.
Right.
So a lot of questions related to rent, mortgage, interest, and utilities and what qualifies. Just a couple of things to point out here. Rent, nothing changed there with what qualifies. It has to be a lease agreement or rent agreement in place prior to or on February 15th. Same thing with mortgage interest, and same thing with utilities. Utilities are defined the same as they were previously. So it's electricity, gas, water, telephone, internet, and transportation. The questions that I seem to be getting, or we seem to be getting most often, what does transportation mean? And I don't think we have a great definition on it. Most believe that it is fuel costs or gas for vehicles or for company vehicles, but we don't have great guidance on that at this point.
Yeah, and the one place that did show up was in a interim final rule related to self-employed individuals, and there, you know, and that interim final rule was specific to self-employed individuals, but you know, it did indicate in there that that transportation costs would include gas for your vehicle for business travel. So, the thought there is, there's no real sensible reason why it would be different for self-employed individuals as opposed to any other business. So, although there's not additional guidance outside of the self-employed area there, I think we can feel pretty good about that. And then note on the rent and the mortgage interest, those are both on real or personal property. So as long as you have real or personal property as collateral on the loan, or you're renting real or personal property, those should qualify.
Okay. Next is the deferral for employer-side Social Security taxes. So this changed quite a bit from when the CARES Act came out originally. At first we thought, and guidance seemed to suggest, that if you got a PPP loan, then you were not eligible to defer employer-side Social Security. Then they came out with some clarification that said that you were able to defer up to the date of your forgiveness. Even if you got PPP, you were able to defer up to the date of your forgiveness. PPPFA, the Flexibility Act, cleared that up and said, no, forget it. We're going to allow you to defer, regardless if you got PPP or not. Defer your employer side of your Social Security payments. Can defer those up until 12/31/20. And then those deferrals would be due. Half of that would be due by the end of 2021, and the other half by the end of 2022.
Right, okay. And just like under prior law, that the deferral period started at March 27th. So basically, your employer from March 27th to 12/31, you should be able to defer.
Right. So here's just a summary of changes that PPP and PPPFA. I think we talked about all of these. I don't know that we need to go into great detail on this, but easier reference to see what did change and what those changes were. So with that, we will go through a couple of some common questions here that have come up, not necessarily related specifically to PPPFA, but in PPP in general. So we hopefully get some of these questions answered for you if these are questions in your mind. So the first one, I got this question a ton early on. Do costs need to be paid and incurred, or either paid or incurred? And it's very clear now that it's paid or incurred. So you potentially could get more than your covered period payroll, more than 8 or 24 weeks of payroll, depending on how dates line up and things like that. But it is paid or incurred, not and. Right. Secondly, we talked about this already, but can I choose between 8 and 24 weeks? Choose a period between 8 and 24 weeks. Like I said before, the prevailing thought seems to be no, but there is some ambiguity there. Look for guidance on that. And again, where that would matter potentially is on your reductions or potential reductions for full-time equivalents or 25% wage reductions.
Right, and just a note there. You see at the bottom of all the slides the link to our blog. Any updates on any of that stuff, we'll definitely post there. So.
Okay, third question, can I reapply for more money? I've gotten that a few times lately as well. No, unfortunately, you can't. It's one PPP loan, as I understand it anyway. I don't believe that you'll be able to apply for any more money, any more PPP. When can I apply for forgiveness? Well, that kind of depends on number two, but the definition is anytime after the covered period ends, and you have up until 10 months, up to 10 months to apply for forgiveness. After your covered period ends.
Right.
Gotten this question to number 5 a lot as well. Are the expenses related to forgiveness deductible? At this point, they are not. So depending on circumstance, if you've got some forgiveness and the expenses that are related to that would be an add back to taxable income at this point. There has been some talk in Congress about changing that and allowing those expenses to be deducted. It does provide some questions on how how sort of administratively you go about this. If you're just say you're a 12/31 year end, is for an example, you don't get forgiveness until 2021. What do I do in my 2020 tax return? So there's some things on that aren't lining up there that we're hoping to get some forgiveness on. And then just one more thing to note, I don't believe, and I haven't seen any indication from individual states on what they're going to do with these expenses or the forgiveness and how they're going to handle that on their individual state tax returns. I don't know if you have, Paul, or not.
Right. No, I haven't. And I think part of that is because the states are really, well, number one, they're only partially operational, but also they're really waiting for the federal government to kind of figure it out. It's clear in the original CARES Act, I think, that Congress intended this benefit to not create a tax liability. They said that the forgiveness of the loan would not be taxable. The IRS is, I think it's important to point out that they issued a notice. It's not like they issued regulations or anything like that. They issued a notice and said, hey, we think that that the expenses related to this tax-free income are going to be deductible, and there's certainly many that believe that the IRS may have overreached a bit there, and to be honest, my personal thought is sort of that they felt like there was at least some ambiguity there, and sort of put Congress on notice to say, hey, we think there's ambiguity and we think you should fix this if this is what you intended. So
what is the last one here? What is the expected financial statement treatment? So this has come up a few times. Obviously, wouldn't impact overall forgiveness, but rather how it gets treated for financial statement purposes. So really kind of two options. Maybe an option isn't the 100% correct word, but first one, wait until full forgiveness, or wait until you have a really good idea of forgiveness, and then take that into income and other income. Or else the other one is if you have more comfort, you're comfortable that your forgiveness application is going to be approved, and you certainly had no question on whether or not you qualified for PPP. There is some guidance out there that would suggest maybe that that you could achieve forgiveness or bring that income or bring the forgiveness income as you're incurring the expenses. So again, it's kind of a facts and circumstances test here on the financial statement presentation. I don't think that it's appropriate. Regardless, I don't think it's appropriate to have in revenue or anything. I think it would be down in other income, and then also probably not appropriate to offset the expenses. It's probably more appropriate to get it down into other income and not offset expenses, like I mentioned.
Yeah, that makes sense.
Okay, that's what we had for our slides. Steve, hopefully, is there. I think he's been getting the questions ready. Steve, do we have anything we want to try and tackle here in the next few minutes?
Sure. So specifically with regards to owner compensation, there's a couple questions that we could probably answer. First one is, what can you use for owners' salaries and payroll costs? I know you guys went over that. I think they did make a clarification that you cannot use healthcare costs for the owners. And the second one on that would be with regards to use of the EZ form. This is a specific question that says, if we reduce the owner's wages by more than 25%, does that preclude you from using the EZ form? Which I wouldn't think it would, because I think we're looking at people who make less than 100,000 and it would be employees, but maybe you guys have some thoughts on both of those.
I think you're right about that, Steve, just because I don't think the owners go into that 25% test.
Correct.
Correct. They're out of those two tables on the forgiveness form, so I don't think that would apply.
Okay. Another question, and this might be a little too much for this. We have a person that's actually selling their business. I have a client that's actually selling their business, and they're going, "What happens to the loan?"
Well, are they selling assets or are they selling the entity?
Well, that's what we don't know. So it might be a little bit too specific here, and you would have to check with whoever your person is or tax person is that they help you through it and
Yeah,
the
I mean,
specifics.
because if they're selling the assets, then presumably the loan is going to stay with the entity to get wound up. If they're selling the entity, then the loan is going to go with the entity. If they are selling assets, I would be a little bit concerned, obviously, about whether they have, the wages and expenses to before they sell to get the loan fully forgiven.
Yeah.
If it's
Okay.
a stock deal, presumably that would be factored into sale price, I would imagine.
Right.
And if it's going to be 100% forgivable in the end, it shouldn't matter, I guess. So the next one is if somebody does pick the 8-week period, what is their FTE measurement period? June 30, or does everybody go at 12/31? That was a specific
Everybody
question.
goes to 12/31. The June 30 period is gone. And again, that's a safe harbor, right? Because if your FTEs didn't go down, you don't have to go to the safe harbor.
Okay, and the other questions I think you guys answered mainly in the presentation.
Okay, great. Thank you, Steve. Then if you do have questions as you look through our slides or things come up, our contact information is here. Please feel free to reach out to Paul or myself. Email, call us, whatever you'd like, and we'd be happy to take questions and see if we might be able to help. So with that, thanks very much for attending, and Paul, I'll let you go ahead and sign off.
Sure. No, thanks everybody. Appreciate you getting on. Hopefully this was helpful for you. Quickly, I just pulled up the chat and I did see one question I don't think we addressed, but it's, if we received our loan prior to June 5th, do we need to have our lender amend our loan to extend the forgiveness period to 24 weeks? The answer to that is no. That's part of the forgiveness process, not actually part of your loan document. So when we were talking about the needing to work with your lender, that was if you end up with a loan after forgiveness, so the loan isn't fully forgiven, if you want that loan to be 5 years rather than 2 years, you need to work with your lender. So, but again, thanks everybody for joining us, and don't hesitate to reach out if you have follow-up questions.
Hey guys, Kayla here real quick. We will be sending out a recap of all this, as well as an opportunity to download the presentation. So look for that in the next couple of days for all people who registered.
Fantastic.
All right, thank you.
Thanks, guys.